Ever wonder if your portfolio's in sync with the market? Meet Beta, the secret sauce to understanding your investments. Beta shows how your investments move compared to the market. High beta, more risk, more reward. Low beta, steady as she goes. Negative beta, that's your hedge when the market's a roller coaster. Watch the full video, because if you're not measuring beta, you're just guessing.
We're going to move on to our final thing, our educational topic. We're talking about beta and understanding what beta is. Gary, if you wouldn't mind, let's start. What is beta? And please give us a definition.
All right, so it's actually really simple. Beta is simply a measure of how your investments compare to the market. So Rob, here's your quiz for the day. You go out, you buy a bunch of stocks at the end of the year. I tell you your portfolio was up 20%. Are you happy with that?
Am I happy with 20%?
Yeah.
Yeah, I'd be happy with that.
All right. Well, what if you found out that, you bought stocks that underperformed the market, and had you bought an S&P 500 index fund, you'd have been up 28%. Now, are you happy with that?
Yeah, I think that was the reason for my hesitation, right?
There you go. Exactly. And that's the whole point. Beta is a way to measure how your investments do. So, if you think you're a great stock picker and your picks are up 20%, but the market's up 30%, have you really done that great, right? Or did you just ride part of what the market did? And so, let's quantify it. A stock with a beta of 1.4 would be roughly 40% more volatile than the market, rising or dropping 40% more than the market does. A beta of under 1 would do the opposite. So let's say a beta of 0.6 means the stock would drop or rise roughly 40% less than the overall market. By definition, the market has a beta of 1.0. So that's really all it is. It's are your investments performing with the market or more or less than the market?
And then Gary, oftentimes we hear alpha and beta, right? So can you talk to us about the difference between alpha and beta from an investment standpoint?
So alpha is the thing that professional money managers play for, right? That's the thing that we care about. Alpha is a measure of how much your stock picks outperform the market, assuming you have positive alpha. Negative alpha, not good, right? You don't want to be up 20% if the market's up 28%. Now, one of the things that we do in an alpha calculation is we look at overall exposure. So for example, I tend to run a very heavily hedged portfolio and rely on my stock picking to produce performance, right? So I'm trying to eliminate beta. I don't want to wake up in the morning, thinking about whether the market is going to be up or down. I really just want to be thinking about my companies and whether those companies will perform well versus the market. So what I'm playing for is I'm playing for almost all alpha, right? I'm just looking for how much my positions will outperform the market. And that's how we look to make money. Somebody who's running an index fund, that's all beta. A lot of the mutual funds, like the US large cap mutual funds, they're closet indexers. And so while their portfolio doesn't exactly match the S&P 500, you'd be amazed at how closely it matches the S&P 500. They're really riding almost all beta. So, you have at one end, the market indexes like the S&P 500, that's 100% beta. The mutual funds, like a large cap mutual fund that has performance is very similar to the market, they probably own positions that are similar to the market. That's mostly beta, maybe a little positive or negative alpha, usually negative alpha after fees. What we do at Deep Knowledge Investing, we are really trying to isolate alpha and not think so much about whether the market's going up or down. We're really just focused on our skill as stock pickers. And that's, if you want to get paid for investing, you want to show that your stock picks, that your returns are much more a function of alpha, your skill as a stock picker, than they are of beta, which anybody can get pretty much for free just by buying a market index.
Love it. Great breakdown there, Gary. And I think that's the overall value of deep knowledge investing. It's not just the information and what we're putting out on a newsletter on a weekly basis, or even with stock picks or portfolio, but it's just understanding how to make money in the market regardless of what the market is, right? Good, bad, indifferent. There's winners and losers on every side to every trade. And that's what Gary keeps you dialed in with. Again, we'd love if you'd head to our website, deepknowledgeinvesting.com.